morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. The fortunes of the country's billionaires take a hit in November. Gross borrowings by the national government fall as it borrows significantly less from the domestic market. Former Energy Secretary Alfonso Cusi and 11 others face charges over the Malampaya gas deal. And after ending the week in the red, how are things shaping up for the local stock market this first week of December? We'll get the insights from the head of research at First Metro Investment, Christina Hulang. First, a recap of how global financial markets fared last week. On Wall Street, the S&P 500 and the Dow Jones Industrial Average notched record closing highs last Friday, lifted by tech stocks. Retail was also in focus as the holiday shopping season kicked off with the traditional Black Friday sales.
I think what's driving stocks up right now is a little bit of animal spirits, if you will. I think post-election, there's a great deal of excitement for what everybody hopes will come, which is a new administration that's more focused on business, lowering regulations, perhaps maybe jawboning the Fed a little bit to be a little bit more aggressive on interest rates. And so the rally continues. And I think, my only cautionary input to that is that valuations are a bit extended. I think that when you look at the analysts' projections for year end, we're not expecting another year like we did. So that might be a good thing, but I think investors need to sort of keep an eye on that.
Over in Europe, stocks closed higher after the release of Eurozone inflation data for November. The headline inflation rose to 2.3%, bolstering the case for a more cautious interest rate cut at the European Central Bank's meeting this month. Here in the Asia-Pacific, markets are mixed in early trade as traders look forward to a data-heavy week. Japan's Nikkei 225 is down nearly 0.4%, the Kospi up 0.5%, and Australia's S&P ASX 200 is up almost 0.3%. And in the commodities market, Brent crude prices rise nearly 0.4%, trading at $72 per barrel. Gold is also up, trading at $2,646 per troy ounce. Here's some key data we're watching out for this week, starting off with the Philippines' November inflation rate, which will be released on Thursday, December 5th. The Bangko Sentral ng Pilipinas expects the Consumer Price Index, or the CPI, to have settled within a range of 2.2 to 3%, which is slower than the 4.1% recorded in the same month last year. In October, the inflation rate rose to 2.3%, up from a more than 4-year low of 1.9% in September. Another important day comes on December 6th, as we'll get the country's October labor market figures. The jobless rate dropped to 3.7% in September, down from 4.5% in the same month last year. Also on Friday, we'll get the latest data on manufacturing production and foreign exchange reserves in the Philippines. Overseas, with the U.S. stocks hovering near record highs, investors are waiting for Friday's jobs report to get a clearer picture of the economy ahead of the Fed's meeting later on this month. A strong jobs report could derail expectations for further interest rate cuts, potentially undermining one of the main drivers of the stock market's rally. The fortunes of the country's wealthiest individuals take a hit as Donald Trump's presidential win sends shockwaves throughout global markets. The combined wealth of the 14 billionaires dropped by 5%, or $2.6 billion month on month in November, falling to $51.9 billion. Ports, casino, and infrastructure mogul Enrique Razon bore the brunt, losing $900 million. The Xi family also lost $900 million, bringing their wealth down to $12.1 billion. The Philippine Stock Exchange fell by a steeper 7.41% to 66.13. This comes as Trump's plans for higher tariffs on several countries have raised fears of new trade wars, inflation, and disruptions to global supply chains. The stronger U.S. dollar and rising U.S. Treasury yields have also put pressure on global trade and commodities. Gross borrowings by the national government fall in October as it borrowed significantly less from the domestic market. This decline could signal a shift in the government's financing strategy, particularly as economic conditions continue to evolve. Total borrowings dropped year-on-year by 42.6% to 129.26 billion pesos. Month-on-month, they declined by 64.8%. Gross domestic borrowings were the biggest drag, falling by 61.37% to 67.46 billion pesos. This could reflect a strategy to reduce reliance on domestic debt, which could have implications for liquidity and interest rates in the local market. The reduction in borrowings may also indicate improved government revenues or a shift in spending priorities. On another front, former Energy Secretary Alfonso Cusi and 11 others are facing charges over the Malampaya gas deal. Politico reports that the Office of the Ombudsman has charged Cusi and his former colleagues for allegedly facilitating Bilyonaryo Dennis Uy's controversial acquisition of Chevron's 45% stake in the Malampaya gas project. The respondents are accused of railroading the approval process despite Udena Corporation, Uy's company, lacking the necessary technical expertise and documents. If found guilty, they could all face imprisonment and a lifetime ban from public office under the Anti-Graft and Corrupt Practices Act. Now, the Office of the President orders the Cagayan Economic Zone Authority, or the CEZA, to develop implementing rules that explicitly prohibit Philippine offshore gaming operators, or POGOs, from doing business within their eco-zones. In an executive order directed to CEZA Chairman Katrina Ponce Enrile, Executive Secretary Lucas Bersamin emphasizes that the rules must apply to both the special eco-zone and free port in the province. This follows concerns raised by Senator Risa Ontiveros that President Bongbong Marcos' blanket pogo ban could be easily circumvented by economic zones accepting casino operators. A mixed round of adjustments in fuel prices awaits motorists this first week of December. Industry sources say diesel prices could see a rollback of 10 centavos per liter or remain unchanged. Gasoline prices, on the other hand, could increase by 60 to 80 centavos per liter. The Energy Department says these mixed movements are due to a drop in U.S. crude inventory and lower overall demand. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
Welcome to Weather HQ. Today's headlines.
Get to know the latest weather update and forecast.
Now, in the satellite image, we can see the air is covered by the storm.
With information to help us understand important aspects regarding our climate, plus different updates and talks.
A reminder to everyone out there to stay safe and dry throughout this inclement time, and hopefully we can get in contact with him very soon.
Paolo Del Rosario, Weather HQ, 9 a.m. on BNC, the Bilyonaryo News Channel.
Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, as of 9:39 this morning, the PSEi index is trading in the green, higher by 0.5% to 66.46. This after dropping 0.4% last Friday to 66.14. The broader all shares index is up as well, up by 0.3% to 37.51. Taking a look at the sub indices, all are trading in the green except for the mining and oil counter, which is now down by 0.7%. And at the foreign exchange market, the peso opened weaker against the dollar at 58.68 compared to its previous close of 58.62. Now, how are things looking for the PSEi index this first week of December and more? Let's get the insights from First Metro Investments Head of Research, Christina Ulang, who joins us now on the show via Zoom. Hi, Christina.
Hi, good morning, Maiki.
Good morning. Good morning. Christina, emerging markets are suffering their biggest outflows since the pandemic, as a lot of the investors are shifting back to U.S. assets following America's renewed America First agenda. President-elect Donald Trump hasn't even taken office yet, and already he's making waves. His recent ones were the tariff proposals on China, Mexico, and Canada. They ripped through Asian bourses. Between now and January 20th, when he assumes office and makes the actual policy changes, do you expect the market to be range-bound?
Yes, of course. Sentiment is really weakened by all of these negative reports coming from the U.S., aggressive tariffs, which are all inflationary for them and also for the rest of emerging markets. So this is really a big drag on sentiment. And so it's going to be range bound for the PSEi, 6,500, 6,800. It's going to be an uphill struggle towards 7,000.
It's a trend that the world is contending with, and it's a trend that we're contending here with in Asia. The peso's weakness, that's another front that we need to take into consideration. This is on account of the dollar's strength, and it's not just our narrative, it's everybody is facing the hit to their currency as well. BSP Governor Eli Remolona Jr. recently hinted of the possibility of the peso reaching 60 to the dollar. How much overhang does this create for investor sentiment, and what are the implications for listed companies?
I think the market is going to adjust to the new reality that we are really part of the emerging market currency, and we are transitioning into a period of greater volatility. And weak peso is not totally bad for the economy. It's going to help boost exports and also the peso equivalent of OFW remittances and PPO income. So that's going to be a further boost on the spending power of the household. And so this is good for our consumption overall, which comprise about 3/4 of our economy. And the good thing is that we have eventually lower interest rates with the lower inflation. So this is going to be not totally bad for the currency. Export booster.
Now, talking about the broader market dynamics, we got a big boost from the S&P 500. They upgraded our credit rating outlook from stable to positive. This is going to support the market. So that's on the plus side. On the downside, we've got a weak peso, and we've got the rift between President Bongbong Marcos and Vice President Sara Duterte playing out internationally. What are your insights on these current push and pull dynamics? What signal are we giving to investors with it?
Yeah, so I think our credit rating agencies are very confident about our ability to pay. The Philippines is a good credit risk. We're awaiting an upgrade because the outlook has shifted from stable to positive. So that means there is a possibility we can be upgraded to the next notch of the credit rating ladder. And that's really a vote of confidence to our ability to grow. Philippines' growth prospects, ability to pay its debt, a very prudent fiscal consolidation process. We are managing our debt very well, and inflation is really working in our favor. It means the BSP will have room to cut interest rates and so lower the borrowing cost. Even this credit rating outlook upgrade is also beneficial to our ability to access the foreign credit market, now that we are in need of funds to bolster our growth.
Following this rating, the Philippines has never gotten an A rating before. Is it within the horizon, within the next 12 to 24 months, especially as we look at how 2025 is shaping up? We've got the elections, we've got the Create More law, spending from the national budget, plus lower inflation and monetary policy easing. Are we primed for our first ever A rating?
Of course, our growth prospect has been very strong. It's going to be even stronger next year because we will have more spending. And I think the growth outlook is going to justify the possibility of an upgrade to this very prime, super prime, super prime credit rating of like in this range. Of course, we are going to be going to the level of upper middle income country, and we need to manage our transition. And I think the credit rating agency has very good confidence in our ability to transition from where we are now to an upper middle income country, supported by our very young population, growing middle class, ability to really boost the spending power given the low inflation. The central bank is saying they're going to cut the reserve requirement of banks. That's going to boost liquidity in the system, lower borrowing costs, and bolster the ability of Philippine corporates to spend under their capex program. And I think it's going to be not really very easy, but because we have the weather to contend with, there is so much climate change happening all over, or not only in the Philippines, and that's really very damaging to our growth, agricultural sector, very disruptive. And now we have this tariff threat coming from the US, so we need to have a lot of resiliency. But the good news is that we have these free trade agreements with the other countries that can diversify our ability to export. I think that's one strength that we have. And also the very small share of our export to the US imports. So there are other countries that are more sensitive to the tariffs, such as Vietnam, China, and all those linked to China. We're not so China-centric. I think we're very much domestic-driven. I think that's going to be our main strength going into 2025 and achieving this higher growth trajectory and higher credit rate.
Okay, great. Good that you pointed that out, that we're not that affected by the trade issues because we don't do that directly with the U.S. Now, on another front, taking a look at the major economic releases that we have for the balance of the year. We've got November inflation on December 5th, and we've got the BSP's monetary board meeting on December 15th, which strategically comes just after the FOMC, the Federal Open Market Committee's meeting in the United States, which is on December 17 to 18. Let's talk about inflation first. The BSP anticipates inflation to have risen for the month of November. What are your thoughts on inflation for that period?
Maybe a bit of an acceleration to the range of 2.5 to 3% within that band, because we have had these increases in the local domestic pump prices for oil, and then we have had this agricultural devastation coming from the very many many storms that we've had, and also the peso volatility is contributing to the inflation pressure, but I think we're going to remain within target and very much benign, that will allow the BSP to proceed with the 25 basis point cut in line with the Fed's cutting also. And that's going to be a sentiment lifter for the PSEi.
So that said, yeah, the market has been anticipating a 25 basis point cut by the U.S. Federal Reserve and by the BSP. So you think all of that is in play still?
Yes, very much. But the question is, will it be enough to bring back the PSEi to 7,000 without foreign buying? Because we have seen the foreign investors get out of the market, total of 67 million US dollars selling last week, no? And that's going to be the main weakness of the market recovery. So I think the rhetoric has to shift in the US. The market has to find a signal that the tariffs are not coming very soon, and that it's going to be like towards year end, and that Congress has to improve it, and that Donald Trump is not really proceed in a speedy manner with regard to the imposition of the tariffs against emerging market and China. So I think the market is waiting for a softening of the US stance with regard to this tariff, and that's going to be a relief to the market.
Yeah, we'll only know in a couple of weeks. In the meantime, Budget Secretary Amena Pangandaman recently said that the Marcos administration is considering revisiting its economic targets in light of Trump 2.0. They just want to manage expectations. Up until then, we don't know whether the rate cut, the policy direction in the U.S. on tariffs is going to be aggressive. Will it be mild? In the meantime, how can investors position themselves in this type of market with this much volatility, Christina?
This is a period of a lot of volatility setting into the market, so we need to adopt a strategy really, which in First Metro is going to be this triple V. And we're always after valuation. We should be very watchful of valuation. We should be very selective of what we are picking in terms of the stock, in terms of the names. Is it large cap? Is it small cap? Is it a mid cap? But the rule of the thumb should be cheap, cheap, cheap. Always buy the companies that have very good earnings power, growth prospects, there's a team in it, and it's cheap. And the next thing really is to watch out for the volatility, making a good timing with regards to the buying and the selling. And of course, we have to also be very wary of the noise, differentiate the noise between what's noise and what's fundamental. And I think we've got very good fundamental stories here. It's just that the foreigners are out and that they're all attracted by the strong U.S. market, very buoyant, but that's too pricey already. Wall Street is too pricey, and the funds has to revisit markets that are really growing and markets that are really uh, valued very attractively and fundamentally justified. And I think we count among those. It's just that we are under the radar because we're a small market. That's very understandable. We're a small market. But as soon as I think we have a tempering of all of this rhetoric and all of this anything related to the U.S. tariff, I think that's going to be very good for our sentiment and also for the foreigners to come back to the emerging
correct,
markets.
right. And while they've exited, while a lot of the foreigners have exited the local market, now is the time when our local, a lot of stocks are looking pretty attractive. So specifically, Christina, what would you buy now?
Of course, companies that have very good growth stories, those that will benefit from the growing middle class, spending, a lot of spending from the coming from the lower interest rates and a lot of uh, spending also coming from the improvement in the cost of borrowing. And I think it's the banks that are going to benefit from this. We like Metrobank and also those vehicle assemblers that will benefit from the very easy auto loans that are available now, which is Toyota, of course, the market leader. And the main beneficiary would be GT Cap. So recommending the banks, BDO, Metrobank, and BPI, and of course, GT Cap. Very reasonably priced right now, attractive.
Okay, thank you very much, Christina, for sharing your thoughts on the market and more with us this morning.
Thank you, Maiki. Bye-bye.
And that was Christina Ulang, the head of research at First Metro Investment. Now, before we go, Harry Phil Asia Resources officially steps in as the new distributor for Volvo cars in the Philippines. Our mobility correspondent, G. Baroga, gives us a closer look at Harry's exciting plans to accelerate the Swedish brand's growth in our country.
Volvo Cars Philippines is embarking on an exciting new chapter with Harry Phil Asia Resources Inc. or Harry now behind the wheel as the official distributor. Harry's Vice Chair, President and CEO Maria Fe Perez Agudo is driving the brand toward a bold future, and she is sharing her vision for what's to come.
Give me a chance to perform better. Give me a chance to bring better value to the brand so that more and more cars can be available on the road. So that every minute I can see a Volvo car in every part of the country.
While Harry is focused on reconnecting with loyal Volvo customers, Agudo is also eager to attract those who have long admired the brand.
There's a lot that we have to do more, and we want to do it more. This time, we want to do it better. We want to do it right. Definitely.
Sustainability is also a major focus for Harry as it partners with Volvo to make a greener future a reality. One of their big moves is the development of fast charging stations to make electric driving even more accessible.
Today, it's really fast charging anymore because in less than 30 minutes, you could charge 10 to 80%, and you're back to your 470 kilometers. So that's why, as I've said, forget about anxiety range. It's not.
Mikael Nilsson, Retail Operations and Aftermarket Manager for Asia Pacific Importers at Volvo, also emphasizes that safety remains a top priority for the brand, alongside its commitment to sustainability.
At Volvo Cars, we try to be a little bit leader in, when it comes to sustainability and safety. So we were the inventor of the 3-point seatbelt. That's I think most people are aware of, and we made the technology available for everyone. And we have always talked about these things even before it became, mainstream.
Over the next 5 years, Volvo aims to electrify at least 90% of its global sales and reduce carbon dioxide emissions per vehicle by up to 75%. The brand's latest fully electric subcompact SUV, the EX30, is already available in the Philippines. This model has the lowest carbon footprint of any Volvo to date. This Volvo EX30 is made from recycled aluminum, steel, and plastic, with production facilities powered by renewable energy. This aligns with the brand's goal of achieving net zero greenhouse gas emissions by 2040. For BNC Mobility, G. Baroga.
And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.